Good evening. The stock market picked up where it left off last week, continuing its sharp slide. The Dow plunged at the opening bell, then recovered. But in the afternoon, the sell-off accelerated. At one point, the blue chip index had fallen by nearly 1,600 points before closing down more than 1,100. That is a record one-day point drop. CBS News business analyst Jill Schlesinger is here. An absolute record drop, not percentage-wise at least. But Jill, talk to us about what's happening now. Is it correction, bear market? What's going on?
You know, we have been enjoying this bull market since March 9th of 2009, the second longest bull on record. So it stands to reason that we've been a little bit overdue for some selling. So if you look at it, this bear market, a bear market would be defined as a 20% drop from a recent high. The last 2 days, we're down 8.5% from the high reached on January 26th. So close to a 10% correction. Not there yet. Got to remind everyone, we've had these dips before. Markets have come back, so we don't know what tomorrow is going to bring.
The president has talked a lot about stocks in the run-up. We're going to have more on what the White House said about this today in just a moment. But put that in perspective as well.
I think the best way to think about it is what would happen if I put $10,000 into the stock market right after the president was elected. And even with this two-day sell-off, that $10,000, it would be worth $13,280 today. I also want to remind everyone, just 54% of all Americans own a stock, a mutual fund, a pension. So this doesn't affect everyone. But
those that are in the market, if nerves are frayed right now, what are you telling them?
I'm telling them, look, I know it's scary. Of course, you see 1,100 points. It really shakes you to the core. However, if you're a long-term investor, you do want to stick to your game plan. And the biggest reason is that we know when people try to time the market, get out of the way of maybe an impending bear, they may make one good decision, but it is so hard to make the second good decision, when to get back in. Historically, market timing doesn't work. Stick to your game plan. And again, if you need your money within a year, get that money out of risk assets. Never should have been there to begin with.
Always good advice. Jill Schlesinger, thank you very much.